Thank you so much, Sakina. I'm so excited to be here with our very esteemed speakers. Today we're going to be talking about elephants fighting. Um, very localized indeed with our local elephants. But anywho, let me just set the scene of where we are today. So we're not out of the woods yet in terms of economic growth. The world is still bracing for further slowing down of the global economy. When we look at the IMF projections, we did see that in 2022, the growth rate was set at 3.5%. And for next year onwards, we do see that there's been a downward revision of about 0.1% to about 2.9% of global economic growth next year to come. So this is again quite low if we were to look at the historical average growth rates, but the silver lining is that we are in ASEAN. And in this region, in the developing and emerging Asia, growth rates since 2022 have been relatively higher compared to other parts of the world. For the next years to come, growth rates are projected to be at about 5.3% and also 5.2% in the region, still the highest in the world. So there's a bit of a silver lining there. But again, when we think about this growth rate and when we think about our region's growth, we need to see how it will be impacted, especially when we look at the developed world and how it is able to absorb inflationary pressures. Because if we think about further tightening of fiscal policies, it will impact consumers' demands for imported products and also services. And again, it will impact on our trade activities as well in the medium to long term. So as I mentioned before, Southeast Asia is still quite resilient compared to other parts of the world. But again, since we are so tightly integrated, in our supply chains, of course, when a recession is felt in one part of the world, it is also going to be felt here to a certain degree. So as a group of small countries in Southeast Asia, trade has always been the backbone of cooperation and collaboration. So today we're going to be talking about trade and the importance of trade to ASEAN countries. So I'm going to start the round of questions, starting with Julia. Julia, when we look at what is happening with our ringgit and with the growth of major economies in the next year to come, do you foresee that inward-looking sentiments from other parts of the world will offset the impacts of further integration in other parts of the world? And what is the outlook of Malaysia's growth in the medium term?
Yeah, good morning, everyone. So I think everyone is worried about inward policies, deglobalization effects. But if you look at the trade numbers, global trade numbers, actually we haven't really seen any significant evidence of the negative effects of that yet. In fact, we saw global trade rebound to record levels after the pandemic, right? We see imports of intermediate goods still rising in the rest of the world. And even in Malaysia, yes, exports to date have been down, right? But total trade in Malaysia, levels-wise, is just under 2 trillion. And in fact, FDIs has also risen to record levels for Malaysia, 75 billion in 2022, net FDI. And that's more than double the levels we saw in 2019, right? So what this means, what does this mean? It means that despite talk of deglobalization, protectionism policies, we actually seeing that trade and investment still continue. It's just a reallocation of those flows to the other parts of the world. It's a form of de-risking, right? Yes, but it's also managing the risk, right? So I think in that light, for Malaysia, so long as that we continue to strengthen internally our growth drivers, our fundamentals, right, then we position ourselves well to benefit from these reallocated flows. But there are two things that we fear, okay? One is that if for some reason in the future, some of these sanctions or restrictions are expanded to other countries in the region in ASEAN. So I give you an example. When the US were contemplating sanctions on imports of solar PV equipment from 4 ASEAN countries, Malaysia was one of them. Right. So eventually, they delayed it because I think of industry pressure, because they would be severely infected. But they've only delayed it for a certain period, I think 1 or 2 years. Right. But something like that, if it were to be expanded into other areas, other industries, so that's one thing we fear. The second thing we fear is in this world of new geopolitical order, right? You have multiple players. What if we see new geopolitical alliances emerge? And at this point, a lot of the ASEAN countries, we are considered neutral or non-aligned. And so we benefit from both sides of investments, from US, from China. So, but the thing is, in the future, we don't know if, let's say, can these countries afford to stay non-aligned and neutral? What if they are asked to pick sides, right? That is the question. We don't know yet, but that is certainly something that a risk that could lie ahead in the future, right? And I think IMF did do a study where they made certain assumptions that in this kind of scenario where the world gets split into 2 blocks, right, and they are all aligned to different countries, right? The ones that stay non-aligned will actually suffer the most in terms of the losses to trade and to growth, right? So those are the 2 risks that I suppose we need to think about going into the future. Thank you.
Thank you, Julia. So the next question will be for Prof. Evelyn. So again, given the situation of further slowing down of global growth and its impact on trade and also investment activities, how can the increase in trade tension between major economies further impact small, open economies like Malaysia?
Thank you, Dr. Juwita, and good morning, everyone. I'd like to put in context what is driving trade today, as mentioned by Dr. Juwita. It's a bit of geopolitics, right? It's not so much economic considerations. Economic considerations have taken a back seat. So there's a big interdependence between trade and geopolitics. On this note, I would like to highlight 4 key points that show us how these trade tensions, or I rather call it geopolitics, have played out and continue to play out, and how this is impacting Malaysia. The first is, I think, also alluded to by Dr. Julia. Geopolitical pressures drive supply chain adjustments. And what we see during the COVID, the buzzword was supply chain resilience. Today, it's just not about resilience, it's about supply chain security. So securitization of supply chains have become very important. And how do we do it? Is to diversification and near or friendshoring. Now, what are the implications for Malaysia? We have to understand that Malaysia also competes with Vietnam. So though we have seen some signs of friendshoring, statistics show that Vietnam's FDI year on year has grown by 61.2% for the first 3 months of 2023. So Vietnam is a quite close contender to us. Second is we have taken a bit of investments through the China +1 strategy. So it's not all bleak anyway. There are some investments pouring in. So that's my first point on supply chain adjustments through geopolitical shifts. Second is geopolitical tensions have driven protectionist policies in the West. So this is where we see the rise of industrial policies in US, China, the tit-for-tat retaliation, export controls, and these are essentially moving targets. That is the fear actually for global trade, because it's very ingrained, those tensions, and the targets are moving. So we don't know what to expect next. In this context, what would be the implications for Malaysia? As Julia alluded to, there have not been major effects through the supply chain. We are very exposed anyway through supply chain centered in China, especially backward linkages, and that actually affects us because the costs that go through backward linkages in supply chains are much higher than forward linkages. So that is something that we need to think about. But having said that, it's very interesting how economic considerations take a back seat. An American company did mention they would relocate their production base to Malaysia. They would consider Malaysia besides Vietnam because the idea is just to have many production bases to actually secure their supply chain. So here again, we see also existing companies sort of expanding. Infineon and Intel, and we have seen Penang has been the top in terms of top state exporting. Yeah. Third point, I would say how geopolitical rivalry has permeated different sectors. And this is where, like how we see the shifts from supply chain resilience to supply chain security. In the same vein, we see the shifts from the race for chips to the race for critical minerals. So critical minerals have come on board, and we see the Linas issue coming back. And I think the latest is the government is trying to give them, has approved, right, till 2026, I think, allowing them to import. And the state governments, such as Perak, moving ahead with engaging China. So I think the links between how it's permeated to different sectors is also something that we need to think about, and how Malaysia can leverage on our rare earth elements. Taking into account sensitive issues such as the environmental issue, and also the relationship between state government and the federal government. And the fourth issue, I think, which is more telling, studies have told us, we don't like this word trade decoupling, but we have to reckon with it. And it's not just an issue of trade decoupling, it's tech decoupling. And this is where, to me, it's the most exciting, because when I see digital trade coming on board, we see how data becomes so essential. But with trade, we see also the scramble for advanced technology. And here I would like to actually emphasize Alan's quotation, where artificial intelligence would be driving economic and military power. So when we talk about trade, we cannot avoid talking about the rise of AI and how data becomes so essential. So this competition for data and AI. So on those 4 key points, I will leave it for the discussion.
Thank you, Prof. Dr. Sanghi, in your view, will further need of reshoring and friendshoring help countries in this region, as we are already party to many FTAs? And another sub-question will be linking back to what Julia mentioned about alignment. Is friendshoring at the end of the day considered as a form of alignment? What is your take on those two questions?
So thank you, Dr. Juwita. Thank you, Ram, for this invitation. Congratulations for making this the first net zero event. And thank you for including me in this incredibly gender diverse panel. I appreciate it. Now, I'm going to make 3 points. One is that we're in a low growth, low investment, low cooperation equilibrium. That's my first point. Second point is that, and alluding to what Julia said in your parallel question, friendshoring is not a recipe for economic global growth. And the third point is that the benefits of FTAs, in particular to countries in the region, may be running their course, but there is still room for improvement in one area, which is services. So in the next 2-3 minutes, let me elaborate on each of these points. So first is we're in a low growth, low investment, low cooperation equilibrium. So the World Bank projected global growth last year to be 3.1%. This year is 2.1%. So it's a third of what we were projecting last year, right? So it's fallen by about a third. Low investment with interest rate rising, high inflation, especially in the US and EU, that makes the cost of capital go up, and we see less investment globally, especially compared to pre-pandemic levels. Low cooperation. Now, this is an interesting statistic that I'm going to put out there. We found out that there are 3,000 new restrictions imposed on global trade compared to around 1,000 in 2019. Okay, so we are really stuck in this low growth, low cooperation, low investment equilibrium, made worse by the increasing volatility and uncertainty we see due to the conflagration of various conflicts around the world. Of course, Israel, Hamas being the most recent one, which will have ramifications for oil prices, for the strength of the US dollar, so on and so forth. So that's the first point. Second point, friendship is not necessarily a recipe for global growth. Now, what is friendship? It's basically a preference to trade with those who have similar values and institutions. Democracy, free speech, whatever the values and institutions are. And this is a marked departure from what I call the free market approach, where companies, where operations move to countries that had the lowest cost. But there are a few problems with the friendshoring approach. The first is, well, friends today, foes tomorrow. And this goes to, Julia, what you were alluding to. You're not sure where things might stand, right? Now, I'm not a student of political economy, formal student, like my colleague Yasuhiko, country manager for the World Bank. But I do dabble into it, and I love this quote by British Prime Minister Lord Palmerston, and I'm going to read it out here. He said that, "We have no eternal allies, and we have no perpetual enemies. Our interests are eternal and perpetual, and those interests, it is our duty to follow." So basically, in global politics, you have no permanent friends or enemies, you have only permanent interests. And if you think of it, think of Brexit within EU, and how Brexit, and how Britain split apart, right? Or consider the US's imposition of the IRA, the Inflation Reduction Act, and the billions of subsidies it has thrown at American firms that provoked a rather uncharacteristically firm response from Europe, apparently its friend, in particular when it came to the EV tax credit, and not just the EU, but also South Korea, right? So you're never sure who your friends are tomorrow, even though they may be friends today. The second, it is costly in the medium term. Julia, you refer to the IMF study. I'm very familiar with that, and just give you the headline number from that. So the IMF did a study which found out that losses due to friendshoring, if the world was split into two blocks, could be as high as 4.7% of global GDP. So friendshoring would come at a significant cost. And finally, on the friendshoring, there is no guarantee that reshoring or friendshoring increases resilience to domestic production. Now, I'm not the first to observe it, others have observed it too, but if you think of the baby milk formula shortage in the US, it had nothing to do with outside forces. It was to do with domestic forces, oligopolistic production of the baby formula. And you don't have to look to the US, you can look at Malaysia. If you think of rice production here, which is a monopoly. So, this talk about, well, friendshoring can help beef up resilience to domestic production, that can only go so far. You have to fix things within your own border first, right? So that's what I wanted to say about friendshoring. And finally, on FTAs. It is true that, or arguably true, that the benefits of FTAs are exhausted when it comes to reducing tariffs on goods. I mean, this region in particular does rather well on that. But service trade liberalization in East Asia is still unfinished business. So if you look at the World Bank index called the Services Trade Restrictive Index, and it goes from 0 to 1. And in this region, of the 50-odd countries that were studied, Malaysia is ranked number 8 in terms of how restrictive its services are. So you can have more and more liberalization on goods, but if you don't follow up with liberalization in services, it's not going to get you much further. And by the way, this is also an implication for the NIMP, the National Industrial Master Plan, which is ostensibly on industrial development, but you need services as inputs, financial, legal, accounting, digital, etc., to make it a reality. So for instance, I just looked up these statistics. Malaysia, Thailand, and Vietnam restrict foreign ownership in telecoms and maritime transport. Malaysia and Thailand do so to varying degrees in commercial banking and insurance services. And Indonesia, Malaysia, Thailand, and Vietnam impose strict restrictions on international data flows. And as we all know, digital data is a new oil of the century, right? So there is room for improvement in FTAs if services are more liberalized, as well as regulated. It's not just opening up services because you need regulation for cross-border data flows, because different countries are approaching it from different perspectives. So you need standard protocols, you need regulations for that. So let me stop there with a summary of these three messages. We are in a low growth, low cooperation, low investment environment. Friendshoring is not necessarily a recipe for global economic growth. And when it comes to FTAs, services liberalization, especially in this region, is unfinished business. Thank you.
Thank you, sir. So going back to Julia, we talked about confidence a bit earlier. What can Malaysia do to ensure that we can improve our attractiveness, not just for foreign direct investors, but also for domestic investors? What is the breakdown on confidence? What would it take for Malaysia to instill better confidence among these investors?
So we like to use this term, build your timber. So through rain, shine, pandemic, non-pandemic, ringgit up or down, we continue to work on the timber on the ground, at home, on shore. And this includes, firstly, I suppose, public finances is one thing, which I think the recent budget has tried to fix. Ensuring that we gradually consolidate our fiscal position, expand the fiscal space so that we prepare ourselves in the event of the next downturn, right? Then on top of that, as you're doing fiscal reforms, you also need to strengthen your governance, improve your transparency, because there's no point, as PM actually did mention, collecting taxes, more taxes, if the confidence on how the government spends it isn't there, right? So improving governance, ensuring transparency, that is very important, especially for confidence amongst the public and also investors. Then, of course, thirdly is transforming the economy, which I believe the new industrial master plan, the NETR, Energy Transition Roadmap, is aiming to do, right? But I think the issue now is trying to get the bulk of the companies, not just corporates, but the SMEs on this path. I think in our day-to-day activities, dealings with the smaller guys, that's the issue that they face. So it's not just navigating the global risks, right? The potential protectionist policies that are coming their way, tariffs, right? And at the same time, they worry tomorrow whether the government will increase taxes for them, right? Because they do understand the government is trying to consolidate the position, right? They're also worried about, new policies, green energy policies that are coming their way, ESG implications. They are also worried about that. So it's actually a very tough world to navigate for an SME, right? So I think that's really a big task that we need to move forward, because over 90% of the companies are SMEs, right? And they contribute a big portion to the economy, right? So I think that's definitely, if we want to move ahead, we want to grow our timber, we want to reach that 5% growth target, 5 to 6% growth target, we need to bring even the small guys, the SMEs, along with us. Yeah.
Thank you for that reminder to grow your timber on the ground, always, with or without the pandemic. So, Prof. Evelyn, we are looking at the different parts of the world, and what was mentioned by Dr. Sanghi, low investment, low cooperation, it seems quite bleak. But what can Malaysia do? What can ASEAN do to offset these sentiments of deglobalization in other parts of the world?
Thank you, Dr. Juwita. looking at ASEAN, ASEAN has always been going on the basis of ASEAN consensus. So I look at ASEAN not as an end to it. It's hard to actually come up with substantive issues within ASEAN. So I would look at ASEAN as laying the groundwork for building frameworks. We started off with food security issues during the pandemic, energy security, and today national security issues. So maybe building the groundwork for like the digital economic framework agreement, but how that will pan out is yet to be seen. Yeah? So beyond ASEAN, I think it's good to look at sub-regional arrangements. Recently, I think the statistics revealed like food security issues were well handled within the context of the Indonesia, Malaysia, Thailand growth triangle. They saw an increase in trade of about 17.6% between 2021 and 2022 due to the implementation of smart agri-farming. So sometimes sub-regional cooperation seems to be more practical, although you may enter other issues such as fractures towards regional cooperation. But again, ASEAN as an institution faced its gravest problem during COVID when they all went separate. There was no regional coordination. We saw the rise of food protectionism during that point in time. And also we must understand ASEAN member states competition coexists with cooperation. So I think it's also important to look at other platforms. One of it is the enlarged architecture of ASEAN, which is RCEP. And here we see a tremendous rise in seaborne trade. An interesting thing within RCEP is we have China there, and regulatory distance is highest in China. So when we think about streamlining non-tariff measures, that would be a better platform than ASEAN per se. We talk about new issues, emerging issues linking trade with labor and environment. These are better handled in a binding agreement like CPTPP. Having said all of that, I also like to look at beyond agreements, formal agreements, such as IPEF, the US-led IPEF. We have America there, and Malaysia doesn't have an FTA with the US, so it's not an FTA. There's no market access obligations there, but I can see sort of three opportunities to engage through IPEF. One is to cooperate on new issues. Malaysia and Canada has already agreed to cooperate in issues related to green economy and AI. And this is where we see the opportunity to engage middle powers. There has been a debate on have the middle powers arrived. I think, and the answer was no, but I think they have in some way, maybe not in a big way, Canada, Australia. So the opportunities to engage, and then we see a lot of frictions in trade along labor standards, right? So we see withhold release orders against Malaysian companies. So it's an opportunity also to engage through dialogue to restore market access, not increase market access, because Malaysia does not have an FTA to negotiate on market access issues. The third, I see opportunity to cooperate in critical mineral supply chains here. So putting that together, to me, ASEAN is just a base, but we need to juggle between ASEAN. So this is where, when we talk about balancing between the superpowers, even in the context of cooperation, we need to juggle between ASEAN and other forms of cooperation. So I see Malaysia moving forward through a multi-alignment strategy. So while we talk about balancing between the superpowers, subsequently we talk about hedging in the context of reducing risk in terms of securitization of supply chains or securitization of even technology. I see now this concept of multi-alignment, although we take into account from a trade perspective that there would be costs through fragmentation, and also take into point Dr. Sanghi's comment about friend-shoring. Besides some problems with this friend-shoring and engaging middle powers, we also have to consider it's not just trade shocks. COVID-19 showed us how a health shock has different, which spills over through lockdowns to trade implications, can have different impacts. So friend-shoring, to some extent, may address in the short to medium term shocks coming to trade, but what about health shocks? Yeah? And also we need to think about how allies may not be allies in the future. Thank you.
Okay, thank you. Yeah, so in ASEAN, we have been juggling while all of us are in RCEP, not all of us are in CPTPP or even the IPEF itself. So Dr. Sanghi, listening to all of this, is there any silver lining, any bright spots as a result of elephants fighting in other parts of the world?
Right. So I'm glad you asked that question because, the classic saying is when elephants fight, it's the grass that gets trampled. But I think Malaysia is a bit of an exception. And there is one bright spot, one silver lining, and that is the semiconductor industry. And it's not even E&E, but semiconductors in particular. If you look at just this year, even the exports from January to August have fallen by 8% year to date. Semiconductor exports have actually boomed. And if you take a sort of broader perspective, semiconductor exports are now about half of Malaysia's E&E exports. Okay, so this is where the distinction between semiconductors and E&E comes. But more importantly, semiconductors are now 22% of Malaysia's exports by value. So imagine just one small industry, semiconductors, almost a quarter of Malaysia's exports by value. And they have been booming, in particular ICs, integrated circuits, growth of 30% between 2021 and 2022. And this all is mostly attributable to the fighting elephants. So to the fact that Julia referred how Malaysia so far has been able to remain non-aligned, and we see this in the data, in the latest World Bank Malaysia Economic Monitor we put out a few weeks back, we actually show new analysis, new research, that how, because of a result of these elephants fighting, semiconductor exports from Malaysia to both the US and China have increased. So it's not like it's increased on one side and decreased on the other. So Malaysia, as of now, at least in the short term, is benefiting from the fighting elephants. Now, we actually have some quantification. I won't bore you with where we show how much increase there is from the Malaysia to the US and China. But there is one note of caution, and that is we also found that Malaysia's imports in semiconductors from China, raw materials, has also gone up. Right? So if the US continues to further sanction China on semiconductors front, that could be a lead lining. So Malaysia would have to cut down on its imports from China on this front. Now, be that as it may, I do want to emphasize that this is all in the short term. Because if you take a look at the longer term, and we have Dr. Lee here from SCRC who's done work in this area as well, and I think we quite see eye to eye on this, that Malaysia has not been able to move in the semiconductor value chain from low to high end. So it's still stuck in assembly and testing and hasn't been able to move up to design and development. And let me just throw out some new, fresh statistics out there that you might find interesting. So even though Malaysia holds an 8% share in the global IC market, and that's a lot for a country like Malaysia, 8% global share in the IC market, the share of its most advanced patents, and that's a particular category called most advanced patents, in ICs is 0.07%. Okay? So that shows you, and Singapore's is, by the way, 3 times more. So that shows you the lack of indigenous innovation. 80% of patents filed in the Malaysian Patent Office are foreign owned. Okay, and in general, Malaysia's R&D is just barely 1%, half of China's and third of Taiwan's. So these are long-term structural issues that need to be addressed if the semiconductor industry wants to keep benefiting and to build on the short-term impetus it has gotten from the elephants fighting. But as of now, the semiconductor sector is definitely a bright spot.
Thank you, sir, for bringing that up because, yeah, I also wanted to chip in that.
Was that pun intended, chip in?
Yeah, chip in, yes.
Okay.
The CHIPS Act. So we've always wanted to improve on our performance, shifting from the back end to the front end. And as of now, we're still very much still at the back end. So with the numbers you mentioned, I think there would be some push, hopefully, so that we can gradually shift into producing higher value added products within the semiconductor sector. Okay, so let's take a look at some of the questions that we have here. So let's start with, let's start with this question on ASEAN. Generally, ASEAN economies are lumped together, but Indonesia, Vietnam seems to have like a trending positively. Since our resource structure is different, how can we take a piece of the pie? So this is coming from Azhar. Any takers on that? ASEAN as one, but we see maybe better trends in terms of growth, export growth, trade growth in Indonesia and Vietnam. And since we have different strength in terms of resources, how can we take advantage of that to take a bigger piece of the pie? Any takers on that?
Oh, I can kick it off. So, yeah, so we do tend to lump countries in the region in similar terms, right? But what I think where Malaysia stands out compared to Vietnam and Indonesia, for example, are on two fronts. One is on semiconductors, even though Vietnam is catching up soon at the low end in many ways, and commodities. So Vietnam does not have commodities, Malaysia does. And at the end of the day, as maybe cliched and trite and banal as it may sound, it's human capital that drives any economy, be it Vietnam, Indonesia, Malaysia, etc. And I think this is where Malaysia really needs to double down in terms of everything that it does, from preschooling all the way to tertiary, to linking industry with academia. And I noted that this year's budget has a lot of emphasis on skill training. There's something called an Academy in Industry program. So at the end of the day, it's about human capital. And this is where, if Malaysia continues to ramp up, it doesn't really need to worry about taking a piece of the pie. And may I also say this, the question is very interestingly phrased. It says, how can we take a piece of the pie? Well, I think ASEAN can cooperate in many ways to grow the pie. And then each country, depending on its own advantages, can take a piece of the pie. But it's really important to focus on growing the pie as well.
Prof? If I could just add a bit, it's an old story to say we are caught in low value added activities. So even in critical minerals, it's just not bringing in investors. Malaysia has rare earth elements, which are important for the EV industry. So it's not just bringing, at the moment we are trying to use the FDI approach to bring in investors to mine these elements, but it doesn't stop there. I think one has to think about downstream activities, which is quite often neglected when it comes to commodities, yeah? Whether it's from the mining or the agriculture sector. In the case of palm oil, let's say, it's a tricky issue because it's linked with environment. So, diversification may be one way to go about it, diversifying your markets, getting in China. But I think one also has to link the environmental regulations and factor that appropriately. But it's quite a contentious issue for palm oil. Overall, when we look at competitors within the region, Indonesia and Vietnam, of course, we are very often Vietnam is said to be the star, the rising star, and taking over low-cost activities. So I think the time has come. In fact, it should have come much earlier for Malaysia to upgrade and find its niche, because we have low-cost competitors. So ultimately, I would say it goes back to human capital, like in the chip industry. Are we able to go beyond assembly, packaging, and testing? Yeah, we have a few investors coming in for wafer fabrication, but it's always dominated by foreign enterprises rather than domestic firms.
I agree with Dr. Apura that it's about growing the pie. While the rest of the world can pursue more inward policies, I think ASEAN should continue to work on being more integrated and expanding and strengthening our supply chains internally. Now, one thing just to add to Malaysia is that I feel that this is a very this is a strength for Malaysia that we should continue to leverage on: cultural affinity. Many a time you hear of stories when they are closing the deal to bring in an investment, a huge investment. What makes the difference between you and another country? Sometimes it's just simply that cultural affinity. And Malaysia being multicultural, multi-diverse, multi-ethnic, we have that strength. And I think that we should use that or play that to our advantages.
Can I just react to this? So I quite agree with Julia. So Malaysia has many strengths that other countries in the region don't. For example, Malaysia is not in the ring of fire like Indonesia, Philippines. It doesn't have to worry about typhoons and earthquakes and things like that. It's a relatively safe haven for investors in that sense, for especially the manufacturing types. It is multicultural, multilingual, but I do sense, and please don't ask me to provide numbers, but my sense is I've been in Malaysia 2 years, and I joke with my Malaysian friends, since I've been here, I celebrated one Chinese New Year, one regular New Year, one Deepavali, one Thaya Pusam, one Vesak, one Vaisakhi. Actually multiply that by 2 now because it's been 2 years. So Malaysia's strength is truly its multiculturalism and multilingualism. But somehow I feel that Malaysia hasn't been able to harness its multilingualism and multiculturalism into economic strength. Okay, and this is something that I would love to hear. I see a lot of heads nodding, but why that is, I don't know. I've been here just 2 years, especially from you, sir. You're smiling the most. And third thing I wanted to say was, so somebody asked me this question in some other panel when I spoke about semiconductors. It's so difficult for Malaysia to move up and to compete with the Silicon Valley types. Maybe Malaysia should double down and just specialize in the low end of the semiconductor chain, the low-cost producing segment. It's an intriguing thought. And you mentioned, I forget who it was, Evelyn, did you mention Vietnam as a low-cost producer? Yeah, so Vietnam is catching up. But the real game changer in Asia when it comes to the low-cost entry in semiconductors is India. So India has just entered this segment. India has the opposite thing. India has always specialized in design and development. But now, because everybody wants to be self-reliant on semiconductors, on chip making, India has entered in a big way, throwing subsidies. It has a deep talent bench. It has low cost. And that's going to be a complete game changer. So that's one big reason why Malaysia cannot afford to keep specializing in low cost end of the value chain.
Thank you. Julia, I think this one is for you. Are positive economic data masked by the weakening ringgit, and what can the country do as a whole to combat this?
Yeah, we cannot run away from the topic of a weakening ringgit. But luckily, the dollar ringgit actually came off a little to 475. I think at one point we were all questioning whether it will break 480 and then, the next level. And it's true. Recently, we did have some positive data. Our GDP, the estimated third quarter advanced GDP actually came in slightly better. I think a lot of people were wondering if it would fall below 3%, but it came in at 3.3%. And it looks like full year, Malaysia should be able to achieve that 4% GDP growth as projected. But I think weak ringgit is also an element of sentiment. And at this point, the sentiment It doesn't help that, well, the US continues to raise interest rates, and we will know this week if they are still going to raise rates, right? Even if they don't raise it this week, the question remains whether they will do it in December or January, right? So I think that possibility of the US maybe raising a little bit more or holding it at these levels for most of first half of next year, I think will continue to put some pressure on the ringgit for now, right? So all these external elements, including a weaker renminbi, right? Because we have not seen the Chinese economy bounce back as strong as expected. That has affected the renminbi, and because the renminbi is closely correlated with the ringgit, that also has weighed on Malaysia's ringgit. So very big external factors, external headwinds, driving where the ringgit direction is going today. But as I said, we need to ride through this volatility and, raising rates at this point is probably not the solution, which is why we don't think, I think together with the markets, don't expect Bank Negara to hike rates this week in reaction to a ringgit weakness, right? We think that probably the best solution is just to keep interest rates on hold for now and ride through the volatility, right? And hopefully next year, once things stabilize, the Fed pauses on rate hikes, we see China coming back, navigating a soft landing, then hopefully there will be silver lining for the ringgit then, yeah.
So can I just react to Julia's comments on the ringgit? Now, I quite agree that there are external factors, in particular the US-Malaysia interest rate differentials, that are dominating the reason why the ringgit has depreciated. But I think it's also important to take a longer-term perspective on the ringgit. Most of the discussion on the ringgit in Malaysia tends to be short-term driven, if you will. Okay, so it's all about external factors, it's US interest rates. Of course, I'm not denying that at all. And I again want to go on record saying that most of the depreciation that you see during current times is because of the US-Malaysia interest rate differentials. But there are longer-term structural factors at play. And there are domestic factors at play. There are factors that the government needs to address that are in play that all affect the value of the ringgit. And let me just mention a few. So in the last Malaysia Economic Monitor, again, that we just put out 2 weeks, we looked at, in this century, in 2000, the period in which the ringgit depreciated the most, and that was between 2014 to 2016. And we found that it's basically associated or linked with the 1 MDB shock that led to huge capital outflows, changed Malaysia's IIP international investment position, and accounted for most of the ringgit depreciation, even more so than the oil prices. Right? So this is a classic example of what you do within your borders also matters, number one. Number two, if you look at the long-term demand for the ringgit through trade and FDI, long-term, I'm not talking of what's happened in the last year or so, that has come down as well. So exposed to GDP in 2000 used to be 120%. Now they're below 70%. So reviving investment, as the government is doing with the NIMP and with other initiatives, reviving trade, easier said than done, but trade and services offers a good opportunity forward. All this would also raise the demand for the ringgit and support it. And finally, I would say that, and pardon me for saying this, again, I've been in Malaysia for just 2 years, there's an over-obsession with the ringgit as the sole metric or the main metric of the strength of the economy. There are many other things that define how good an economy is doing. And if you look at the other, at these headline numbers, low inflation, low unemployment, poverty that's coming down, all those things matter as well. And the ringgit in some ways is just one of many, many factors.
Thank you, sir. I agree with you. It's one of many factors, but the fact that we're the worst performing currency is also a concern. And also, this is why people are still talking about it. Sorry for trampling into the second session's focus, but bringing back to talking about trade, Prof. Evelyn, Malaysia has a high share of re-exports in its total gross exports. Why is that so? And is this a cause for concern? Is it a sign of supply chain realignment? What is your take on that?
We saw a high increase in share of re-exports even before COVID. So I don't think it's solely a case of realignment along the supply chains. Part of it, yes. One of the possible issues here is that Malaysia is also moving into distribution, becoming more of a distribution center. If you track the semiconductor industry, there were roughly about 10 product tariff lines at the HS6 digit that somehow went missing. So we're not really exporting. What we're doing is just distributing. So you see the rise of distribution centers. So, I mean, that could be one of the reasons contributing to this increase in re-exports. I don't see it as something that is bad for the economy, because re-exports also, there are studies that show that re-exports also certain form or to some extent employment creation through warehousing and so on. So it's not something that we should look at as negative for the economy. So there's some form of job creation even through re-exports, even though it's simple packaging and issues like that. Yeah.
Dr. Sanghi, I have 3 votes for this question on your view on human capital. Going back to education, is Malaysia's education level attainment or quality even lower than countries like Vietnam and Indonesia? What is your take on that?
So I'm not that familiar with the nitty-gritty of the education levels in Vietnam and Indonesia other than in broad terms. But what I can say in Malaysia is that Malaysia spends a fair bit on education. So it's not, unlike health, where it spends way below comparator countries, Malaysia's spending on education is not below par as a percentage of GDP. But the problem is there's the graduates that graduate from Malaysian universities at the end of the day, they might be equipped with technical skills, but they are soft on soft skills, collaboration, problem solving, and on digital skills. And this is what we found in our latest analysis that speaks to the mismatch between what Malaysia's education system is churning out in terms of graduates and what the market is demanding. And I know that in Vietnam, there's a huge emphasis on TVET that works very well, on specialized technical skills that works very well. So that is a big difference, I think, between Malaysia and other countries. So it's the lack of emphasis on these soft skills and increasingly digital skills. And the other factor, and I don't remember the statistics off the top of my head, of course, in Malaysia, you have low female force labor participation. So Malaysia's women in the workforce is about 55% or so. So I don't know what's in Vietnam, but I know in Japan, it's about 70+%, and Japan is a fantastic story of how it went from even below 55%, I think it was in 2000, to now 70% plus, right? So these are some of the structural issues in not just the education, but in the broader sort of skills, for the lack of a better word, sector, if you will, in Malaysia.
Okay, I hear the bell. I think one of the bells would signal that we're coming towards the end of the session. But I would like to use one of the questions here to ask the speakers to give their last thoughts and messages. What is the one thing that Malaysia needs to structurally improve to attract further FDIs, from shifting our investment destination from China to the ASEAN region? So maybe here I can just tweak the question a bit. What do we need to do structurally to improve, to attract further FDIs into the country in the medium to long term? So maybe I can start with you, Julia.
I think to further improve confidence, investor confidence in Malaysia, I think ensure that the policies that have been laid out are well executed. Right? So we've seen some good positive policies that have come out of the budgets. In fact, we had one that was about incentivizing businesses to relocate from other parts of, in the region, in the world, to come to Malaysia with tax incentives of between 0 to 10%. So we've done all that. So we should continue to pursue those and ensure that it's well executed, pragmatic, and balanced, right? So that you ensure that you is also supporting the economy at the same time. And one more thing is that it's not just about FDIs. Of course, we also need to grow our domestic investments. And it's positive that the recent first half investment approval numbers, at least 52% of that is actually DDI, domestic related. So I think we should continue to work on that, because only that way that we can ensure a sustained inflow of FDIs supported by a broadened, strengthened domestic supply chain.
Thank you. Prof?
Okay, when we talk about this drive, export-led recovery through semiconductors, and we're quoting FDI, one of the problems raised was that we limit green energy, renewable energy, and chip suppliers need that. So I think making this transition, green transition, is important. We're not quite there. We're quite slow in this transition. I think making that transition is important if we want to actually attract these chip suppliers. Second is, of course, we talk about human capital. Goes back to that. We have been quoting a lot of quantity-based FDI, and then now we say we bring in such as advanced chips. But the thing is, at the end of the day, we are not grooming our own domestic investment in these areas. So some kind of transfer of technology is very important, because we can't be reliant on FDI. FDI and DDI has to grow simultaneously in quality kind of base investments, not just about quantity and not just being suppliers to these foreign investors.
Sir?
So I'm going to say two things. So the point on DDI has been made, so I won't repeat that, as well as the quality. Now, the World Bank does investor surveys in practically every country we work in. And we've been doing these investor surveys for, 70, 80 odd years of our existence. And it's remarkable to me how the three top reasons why investors invest in any country are persistently the same across space, across time. And these are policy stability, and note that is policy stability, not political stability. Because politicians can come and go, but if you have policy stability, that matters. The second is quality of infrastructure. It used to be physical infrastructure, now it's increasingly digital. And you can arguably say Malaysia does reasonably well on these two. But it's the third where Malaysia falls short and answers that question. And it's talent, talent, talent. And Malaysia just doesn't have enough talent in its borders to get to the next level and quality of both FDI and DDI. And the way the government tries to compensate for it is through tax incentives. And that's my second point. Tax incentives look costless on paper, but they cost you a heck of a lot. And B&M has some numbers out there that tax incentives have cost about 6 to 8% of all revenues. And this is not to say that all tax incentives are bad, but you have to separate out the good from the bad and the ugly. And the final point I would make on incentives is, and this is a compliment to Malaysia and to MITI and the government for getting the likes of Tesla and AWS into Malaysia, which is great for Malaysia's branding and is great for many other things. That's fine. But Malaysia also needs to, so these big companies, if there's any sign of trouble tomorrow, it's very easy for them to pack their bags and leave, because they don't have that much skin in the game. So as important as it is to get these big brand names in Malaysia to, and some incentives have been given out to them, we don't know what they are, they haven't been made public, be that as it may, it's important to attract the next tier of smaller or medium companies that have maybe less bargaining power than a Tesla or an AWS, but have more staying power. They have more skin in the game. They'll think twice about packing their bags and leaving at the first sign of trouble.
Okay, thank you so much to the speakers, and I would also like to thank all of the audience for their questions. I will now close the session, and I'm sure there's a lot of food for thought, but please do approach our speakers if you have any other questions related to the session. Thank you all, and I bid you a very good morning.